Cosmos Bank, HDFC Bank, Citigroup, and DBS. I worked in almost all the departments: retail banking, corporate banking, trade finance, and treasury. So I have an experience of more than almost now 12, 13 years teaching. Okay. So all of you, you are in the right hands, definitely for BFM. BFM, kindly note the subject is not that easy. Subject is a tougher one. Okay, subject is tough. So it's called as a king of all the subjects of BFM, of CIB. King of all the subjects. Why? Why is it called as a king? Because kindly remember, the reason being, you'll see the subject when you see the topics. Topics are really difficult. Numericals are the base of this subject. We'll be covering the numericals also at the end. When we complete the modules, we'll be covering this numericals. Okay? So don't miss even a single lecture. And if you miss it, go through the recorded sessions. Don't miss this. Okay? Because this subject is really, really, really difficult. You can ask your seniors also. Basically, remember, now it's a registration period. So for those who have not done their registration as of now, kindly note the registration has started from 2nd and up to 8th, right? It is normal fees, 5,000. Then afterwards plus 100, then plus 200. Okay, up to 22nd, I think so. 3 weeks are there. Do it in the first week itself. Do the registration in the first week itself for the exams. I'll tell you why. I've seen the general tendency of students. What do they do? The registration part, how do they do? For registration, they will wait till the end. 3 weeks are there. So what will the students do? I'll tell you. See this. This is your time. Okay? This is first week, second week, and third week. Right? Registration is given. This is plus 100. This is plus 200. What will the students do? Students will do like this. Say this. Bankers, because we are bankers. As a banker, you are used to follow the deadlines. Isn't it? In your bank also, you see, suppose if you are told to do something on 15 days after, the bankers will start after 13th day. If you are told to do it on 15th day, will start after 13th day. Same thing about studies also, CIV. We will start roughly around what? 1 month before or 15 days before. We have the habit of banking. Same thing will happen in over here also, but you don't do it. Bankers will go like this. Okay? They will go like this. For first 2 weeks, nothing. Third week also, half, nothing. Then zoom. The registration will jump like this in the last 3 days. You don't do it. I would suggest is do it over here only. Do it over here only. Why? Because you have already done the membership registration. Now only exam registration. That is very easy. A hardly 5 minutes task. So do it in the first week only. Save that 100, 200 rupees also here, isn't it? So, do the registration. Then what are the subjects? For registration now, you need the subjects. Okay, I'll talk of BFM over here because all the 4 you can see. Many of you might be knowing all these things. Mainly I'll talk of BFM. BFM is basically ABCD module. All the 4 modules are equally important. A and B. Okay, A is related to Forex. Numericals are there, objective questions, case studies, all the Forex part. Okay, then you have risk management, module B, related to risk. Now, module B is totally related to risk management. Now, what happens? You will see the repetition of module B in module C and D. Repetition. Why? Because module C and D are a subpart of roughly module B. Okay, repetition. The module C is totally related to treasury management. You have over here, I'll give you all the topics also. Totally related to treasury products, derivative products, everything is included over here. Then balance sheet management. This is a module D, means this is one of the main topics now, main modules now. Because Basel 3 is the talk of the town. All the banks are afraid of Basel 3. Because the numericals are nowadays based on Basel 3 only, many of them. So you'll have to focus on this balance sheet management, module D. Okay, this is basically pillar 3 of your Basel 3. Okay, corporate governance. So these are the 4 modules. Now some of the students ask me which elective do I select. For selecting the elective, I will give you one hint. Okay, the hint is never ever select the tougher ones. The tougher ones are IT, central banking and risk. Very tough. Don't select that. Okay, select the simplest this elective, that is HR. Very simple, very easy. Why? Because in ABM you have module B as HR. So 50% of your studies are done over here only. So you need not study again. Means 50% is done. Only 50% you have to do it then. Okay. So that's why try to select always. See, try to reduce your stress. Okay. Why are you going for extra stress? Isn't it? Got it? So select HR, the best I would suggest. Now it's up to you after all. Some of you might be thinking rural, I'll select. Some of you might be thinking risk management. But frankly telling, all these 3 are really tough. IT, central and risk. HR is the easiest one. Select that. Okay. Now in BFM, roughly you have around 40 marks case studies. See this, 40 marks cases. Out of these 40 marks, 25 marks are numericals. Numerical case studies. 5 marks, which means 5 case studies you will get rid of numericals. Plus 15 of theory. Okay. So this is the overall structure for case studies and objective questions. Now remaining will be objective questions. Now these objective questions mean 60 marks. These objective questions will be of 2 types. One with objective, second is without objective. So this without objective are called as subjective questions. In subjective questions, you won't be having any option. No option will be given. Directly question, that's it. You have to type the answer. What is the query? English, Nirmal. The language will be English only for me. You can have a separate Hindi language also. There is a bilingual session also. Okay. Praveen sir is taking it. Okay. So you can join that Praveen. Suppose if you want Hindi, you can join the Praveen Kumar's batch also. Okay. So I'll be taking completely English. Got it? So now, these 60 marks will be objective questions. Okay. Now, as I told you, there are some questions nowadays asked which are called as without option questions. Only numerical. Generally, they ask you numerical only. They will not ask you any theory behind or theory question. There you don't have any option. You have to just type the answer on your own. Generally, they ask you some question related to numerical, so that the answer is only one. Okay? Clear? So, this was it about BFM's initial part. Now, let's move on. What are the topics? Okay? Important part. There is no negative marking. Okay? There is no negative marking. So, you can be rest assured. Kindly note, because of this, you can solve the complete paper. Don't miss even a single question. Okay? Now, how can you succeed in exam? See, for success, I'll just give you fast points. Okay? Create a study schedule. eat healthy, revise effectively. See, eat healthy is very important. Okay? Because your health is only important in your CIB exams. You get so much stressed that the health matters in that case. So that's why be healthy. That's very important. Take breaks, organize your study space, ask for help. Under 24/7 is having all these helps. We are having AI assistant also, artificial intelligence. You can ask any question and you'll get the answer there only. Okay? Ask for help. Then avoid distractions. Okay? Don't try to distract yourself. Focus on your studies, only studies. 2-3 months, no nothing. Okay? Then practice old papers. Mock tests are available at Adda 24/7. Manage your stress. Health is very important. Again, I am telling you because BFM subject is very tough. Okay? BFM is very tough. So that's why. What has happened? Pradeep Singh, you are commenting something, you wanted something? So manage your health, manage your stress, very important because you have to work in the bank, you have to follow your targets, you have to follow your BMs, branch managers, all these instructions. And after that, you have to study also, right? So it's not easy. So as it is not easy, you have to focus on your studies and focus on your health, both the things. Okay? So next, knowledge of the syllabus is a must. You must have compulsorily the knowledge of syllabus. I'll give you that. Syllabus is not an issue. Then time management. Time management is a must. You have to focus on time management. Otherwise, even 24 hours will be lesser for you. Okay, you have to focus on the time management. You have to rob the time. How will you rob the time? Try to rob the time while traveling. Avoid going to some family functions for next 2-3 months. Try to study as much as possible. Okay? Focus on the important topics. Important topics I'll tell you. Work on the weak areas. Weak areas. Okay? Very important. Mostly I'll tell you work on the numericals. Because numerical case studies are really important. Go through the previous year's question papers. This is available in the mock test. Practice is the ultimate way to succeed. And don't overburden yourself. This is also very important. Don't overburden. Don't take too much stress because stress will kill the time actually. Okay? How much time is required for CIB preparation? Minimum 1 hour daily. Minimum 1 hour daily, compulsorily. You require 1 hour daily without fail. Okay? So you'll ask me, sir, but we do the classes for 2 hours, 3 hours. Other than these 2-3 hours, you have to do half an hour self-study. You have to do it. At least revise whatever has been taught in the class. Go through the videos again. That's also enough. Follow the instructions given by the mentors. Okay? Those who are watching on YouTube, kindly download Adda 24/7 app. Okay, download it and go purchase the batch through the app only. There you will be getting 1% extra. This syllabus is very essential for the aspirants who are preparing for upcoming CIB exam. See, I'll give you the syllabus now. Very important. Okay, without knowing this syllabus, you can't clear. Because syllabus is obviously syllabus is a must for anything, isn't it? Some changes have been introduced. The subject has 4 modules. Okay, it is divided into 4 modules. What are the 4 modules? International banking, risk management, treasury management, and balance sheet management. These are the 4 modules. Okay. International banking, risk management, treasury management, and balance sheet management. Now, look at each one. I'll give you the details of each one. Module A. See, the subjects are exchange rates and forex numericals or forex business. In this subject, in this topic, you'll have the numericals. You have the numericals, okay? Quite good ones, tough ones also. So you'll have the numericals over here. Exchange rates and forex business. Here you'll have the basics of what the forex rates are, what is the foreign market, what is the forex market. Okay, all these things will be there. Plus, now second is LRS, Liberalized Remittance Scheme. This remittance scheme has been brought in by RBI. Yeah, I'll give you the Telegram channel. I'll give you. Jyoti, okay? I'll give you the Telegram channel. Okay, see, this Telegram channel is very important for you. See, what has happened is, I share an important PDF on the Telegram channel that is available only for the paid students. Okay, so in this Telegram channel, the PDF which I share, this PDF is having so enormous amount of information regarding this BFM subject that almost 90% of the paper comes from this PDF as well as the classes. That's enough. You don't need to read anything else. Just read the PDF and follow the classes. You'll clear the paper with more than 60 marks. But for that, you'll need to join the Telegram channel of mine. Okay? So, Liberalized Remittance Schemes, LRS. What is LRS? LRS has been brought in by RBI, $250,000 per person per year. You can transfer it outside. That is LRS. Okay? So, the details of this scheme are to be discussed. Now, there are certain norms to this. Okay, for education, the amounts are different. For hospitalization, the amounts are different. Okay. Other remittance facilities for the residents. What are the other remittance facilities? What are the ways in which the residents can transfer the funds outside, other than LRS? Correspondent banking and NRI accounts. Correspondent banking means basically you are talking of the agent banks. Agent banking system means all the banks can't open their branches everywhere in the world. So you have to take help of other banks. Okay, pay them some commission and they'll work for you. So that is known as correspondent banking. NRI accounts. NRI accounts means basically you have three main accounts. NRO, NRE and FCNR. Plus you have fourth account also, RFC. Plus there are nowadays special accounts. Okay. So this NRI accounts, these accounts you will be studying. Plus documentary LCs. Now documentary LCs is a big topic and very important one also. Because that is the base of all the international trade now. Okay, under this doc LC, you'll have various banks, confirming bank, negotiating bank, okay, nominated bank, issuing bank, various banks are there. So all of them you'll have to study, various types of LCs you'll have to study. What is transferable LC, what is back-to-back LC. Okay, various types of, what is green clause, red clause, many types of LCs are there. Facilities to exporters and importers. What are the facilities to exporters and various facilities given by the government? For manufacturing sector, there's a different facility. For service sector, different facility. For IT sector, different facility. All these you have to study. Then, ECB, External Commercial Borrowing and Foreign Investments in India. So ECB and foreign investments. Now ECB is what? ECB is basically the loan taken from some outside bank, foreign bank. Okay, that is a loan. So ECB and foreign investments in India. What are the various types of foreign investments? That you'll have to study. FDI, FPI, FII, all these investments. Okay. Yeah, that I'll share it. Tomorrow I'll share it. Okay, Apurva. Timing of the batches is 8 to 9. Let us know from which date it will be started. Tomorrow, Alok. It will be started from tomorrow. Okay? Can I choose IT? Yes, you can choose if you want. Yeah. If you want, you can choose IT, but it depends. Just check the portion of IT first, then only choose it. Otherwise, what happens, you'll find it, you'll choose it and then you'll find it, I shouldn't have chosen it. Okay, you can choose it. See here, you can. I've given the simplest elective, that is HR. But if somebody wants, you can take others also. I myself teach you central banking. I take the elective of central banking and risk management. The toughest one elective is risk management and central banking. These two are very tough. Means risk management is the father of BFM. It's that simple. Risk management is the father of BFM. So that's why I'll be taking that also. And I'm having notes for that. See, central banking and risk, if you select, okay, I'll give you the notes again. Like BFM, I'll give you another PDF for central banking and risk. And that also you'll clear that paper. That's but obvious. But 7 days is a very less time for studying all these risk and central banking. HR is a okay type. Okay? So now ECB, external commercial borrowing, okay, and what FI, foreign investments. So kindly note, ECBs are of various forms. FCCB, foreign currency convertible bond, foreign currency exchangeable bonds. You have this using these two also. Plus you have various loans, loaning facilities. So that is also bonds issuance. That is also there. Foreign investment already I've told you FDI, FPI, foreign direct investment, foreign portfolio investment. Then you have this ADR, GDR. That is also part of this only. Okay. Now RBI has made some change also this time. This time they have made the change that Vostro account can be opened. Do you follow my updates? I give you the banking update every Sunday. Kindly check it. See, every Sunday I give you the updates on banking. What is the latest happening in the banking? So check this. This Sunday I have given, last Sunday also I have given. Just 2 weeks back I have started it. So follow that. Don't miss this. There is a special update given by RBI just 2 weeks back that Vostro account can be opened by any foreign bank in their country without taking the permission of RBI. So this is a new development. So such things are over here. Okay. So risk in foreign trade, role of ECGC. What are the various risks in foreign trade? The various risks in foreign trade are basically, it can be your market risk, operations risk, credit risk, okay, forex risk, liquidity risk. There are almost 12 to 15 types of risks. All of them are given in this. Mainly, all of them are not required, but at least 7, 8 are required. Then you have classification of risk done by ECGC. Okay, ECGC has done classification of various risks. There are almost 6, 7 types. What is the role of ECGC? ECGC means what? Export Credit Guarantee Corporation. It is an insurance company. It is the insurance for your exports. So ECGC will basically give you this, give the insurance policies for first bank and second one is your customers. For bank, ECGC gives the guarantees. Okay, guarantees. Various types of guarantees are there. For customers, it gives the export policies, means insurance policies. There are various policies. The policies for customer are almost 7 to 8. All those you have to study. Guarantees for bank are around 4 to 5. 5 types of guarantees are there. You have to study those. Role of Exim Bank, Reserve Bank of India, Exchange Control, FEMA, FEDI and others. This is a theory topic. Easy type, not that difficult. Okay? Hardly 2 to 3 pages. Okay? So this is easy one, 8th one. 9th, International Financial Service Center and IFSC and GIFT City. So again theory, this is a new topic which has come in. Earlier it was not there, but our government has started a GIFT City in Gujarat, Gandhinagar. It's a sort of SEZ for finance. So you'll have this. This question also comes on almost 7, 8 marks. This topic comes 7 to 8 marks. 7 roughly. You have theory only, no numericals. Taken in this international banking. So here you'll have the technology part. In your international banking means all. There are 2, 3 terms over here. Have I written? No. EDPMS, IDPMS. export data process management. Okay, and similarly import. So all the bill of entry and SDF form, EDF form, these are all mechanized now. So this is all the technology. Plus you have in this blockchain technology, the use of blockchain in international trade. That is also studied over here. Okay. So that's about module A. That is about module A. Okay. From tomorrow, the main class will be starting. Kindly note. Now, module B. Module B is also a big one. Module B is all related to risk. Risk management. All the chapters you'll have it with risk. Risk and basic risk management framework. Risk in banking business. Risk regulations in banking industry. Market risk, credit risk. All these risks. Okay, 5 plus 3 are more. 3 more are there. 15. See this. 16, 17, 18. Operational risk and integrated risk management. Liquidity risk management and Basel III framework on liquidity standards. So basically you have 8 chapters. Module B is also one of the toughest modules of your CAIB. In fact, like that, all the modules are tough, equally tough. C is also difficult, D is also difficult. Okay, all are equally difficult. But module B is a base. If you understand module B properly, C and D will be okay type. So in module B, what do we have? See this. Risk and basic risk management framework. You'll have all the committees. Board of Directors, RMCBs, ALCO, ORMC, CRMC. All these committees are there in this. Plus, what are the various this limitations given? Limitations means what are the various you can say limits given. Okay, to various traders, to various transactions. Risk in banking business. What are the various risks? Already I have discussed in ECGC we have seen the risk in banking business. So same thing over here. Liquidity risk is there, funding risk is there. Okay, then you have exchange rate risk. These are all the new risks. You will be studying this again in module C. Risk regulations in banking industry. Risk regulations means what are the in the sense regulations in the sense what are you can say the guidelines given by RBI. Guidelines given by RBI. That is known as risk regulations. Quite a big chapter, very big chapter. Okay, very big. Okay, market risk. Market risk, see 3 risks now you will be getting: market, credit, and next one is ops. So market risk, credit risk. Market risk is what? It is related to something which is not in your hands. Means if tomorrow, let's say this Russia invades Ukraine, market risk. USA puts tariffs, market risk. China invades Taiwan, market risk. Bharat takes on POK, okay, market risk. So all these elements, or RBI does something, market risk. So everything is related to market risk, which is not in your hands. As a banker, it's nothing in your hands, right? Can you go and tell Putin tomorrow that don't invade Ukraine? Or can you tell Zelensky that don't join NATO? You can tell them. So this is not in your hands, but this will affect your banking. The rates are immediately fluctuated. If you have seen yesterday have you seen this? The dollar rate versus the pound. Have you seen? Biggest fall yesterday had come. Biggest fall in last 23 years. Biggest fall of dollar versus pound has come yesterday. Means pound has fallen. Pound is becoming weak. All these are market risks. Okay, UK having the debt of 104%. France having the debt of 106% of the GDP. 16%, sorry. 116%. USA having the debt of almost 120% of the GDP. These are all problematic. So these are all market risks. These will all affect the market and treasury bonds. Credit risk. Credit risk is consists of 2 parts. One is country, second is counterparty. Country means, suppose if I tell you tomorrow, kindly invest in, let's say, North Korea. I'm opening a business in North Korea. I'll give you a returns of 20%. 20% per annum returns. Invest with me, North Korea. Will you invest? No. I'll tell you to invest in Afghanistan. I'm opening a business in Afghanistan. Open it. You invest, give money to me. You will not give. Because that is a country risk. You know, Afghanistan, once the money is gone, it will never come back. Right? Say, next one is this counterparty risk. Counterparty means what? The country is good, but the customer is bad. The customer runs away. Vijay Mallya, counterparty. Okay? So this is counterparty risk. So these are the two types of credit risk. Plus there are various subtypes also. We'll be studying, means whenever the topic comes, you can go through the videos also. Operational risk and integrated risk management. This is basically related to ops risk. Okay, and integrated risk management. So ops risk, operations risk. Liquidity risk management. Now, what is about operations risk? Operations risk is related to your systems. Your own errors, employee errors, systems down, server down. These are all operational risk. Floods, dacoity, robbery in your bank, operational risk. Liquidity risk management related to liquidity. Daily part. Liquidity is what? What do you mean by liquidity? What is liquidity? Everyone. Liquidity means you need to have money to pay your daily expenses, salary, your monthly rent. That is liquidity, isn't it? So how to manage that liquidity? Okay. Here you will see various terms. What is bankruptcy? What is liquidation? All these you will see. How to manage the liquidity. Basel III framework. Here you will see all the three pillars of Basel. Pillar 1, Pillar 1, Pillar 2, Pillar 3. Okay. Pillar 1 is related to your capital. Capital management. Total means how to manage your capital. Three types of capitals are there. Market risk, credit risk and ops risk. Then Pillar 2 will be supervisory review, SREP. This is basically the check on Pillar 1. And Pillar 3 is market discipline. It is a open case for the investors. So these are the three pillars. You will be studying about this. Now this Basel 3 you will be studying it again in module D. Here also you are studying these two chapters. You will be studying it again in module D. 17 and 18. Again you will be having. I'll show you now. Okay. So that's about module B. Then comes module C. We'll be starting with module C tomorrow. Okay. We'll be starting with module C. Introduction to Treasury Management. Now, what is the latest Treasury? Treasury nowadays is known as Integrated Treasury. Okay, it is known as Integrated. Correct. Who's this? Jyoti, Apurva, Prakash Kumar. Very good. Yeah. Tomorrow we'll be starting with module C. Okay, GS. Module C. So, Introduction to Treasury. Nowadays we call it as Integrated Treasury. Integrated Treasury means what? It means the Treasury nowadays connects the bank to the external world. Treasury takes the money from the bank and invests it in the bonds outside. So it is connecting basically the external world to the bank. The middle person is Treasury. So what is the role? How do they earn profits? All this. Treasury products. What are the various treasury products? Treasury does three types of products. Okay, one is your we call it for the corporates. The products like swaps we have. Treasury does all these derivative products, options, swaps, futures. Okay. Then FCA, FRA, forward rate agreements, all these are under over here. Now you'll see three chapters similar, three chapters. Treasury products, international equity and debt products, and derivative products. All the three product. They'll be related to each other. Okay. So treasury products, I told you, international equity and debt products. Here again you get that ADR, GDR. These are international equity and debt products. What are the foreign equities? Can you buy foreign equities? How much can you buy? All these things. Funding and regulatory aspects. Now funding and regulatory means how do you manage the funding? Now this chapter 22 and 23, these two are related to each other. Because funding and regulatory and treasury risk management are related to each other. Kindly note, treasury will always look at the shortest period. Treasury never looks for 10 years. Treasury will always focus on 1 year. Okay. So funding and regulatory means what are the various types of funding risks? What is known as a gap risk? What is a liquidity risk? What is time risk? What is price risk? What is interest rate risk? All these are over here. In fact, these are over there in module B also, module C also, module D also. Then you have treasury risk management. Treasury risk management. How does the treasury manage the short-term risk? Long-term it will never manage. It will only focus on short-term. What is bucket system? What does RBI say about bucket system? What are the penalties for not following this bucket system? Derivative products. Various types of derivatives. Just now I told you. Forwards, futures, swaps, options, FRAs. Okay. Various types of swaps are there. All these will be studied. What are the futures? What is the difference between future and forward? What are the various types of futures? What are the various types of forwards? What are the various types of swaps? Okay, swapping means exchange exchange of cash flows. Got it? Treasury and asset liability management. Treasury and ALM. ALM means basically managing again the short-term risk. Okay. We'll be starting with module C tomorrow, Alok. We'll be starting with module C. Okay. So treasury and ALM. This module will be starting. Treasury and ALM. ALM means what? Asset liability management. Kindly note again, ALM is related to always short term. Maximum 1 year or 5 years is more than enough. Generally 1 year only. Okay, so this is about module C. Module C is okay type, means tougher one. It's not that simple because the derivative products over here are really difficult. Pay attention whenever this topic comes. Then you have module D. Okay, module D is treasury, this balance sheet management. Balance sheet management means it is related to Basel III framework, Pillar 3. In fact, many components of Basel III are included over here. Components of asset and liabilities in bank's balance sheet and their time and their management. So what are the various assets and liabilities? Loans. See here, bank doesn't have only loans as the assets. Many of us think that loan are the assets. Okay, agreed, loan are the assets, but not only loans. Various investments done in bonds, those are also assets. Liabilities, deposits. Not only deposits, but various bonds which you have issued. Debentures which you have issued, that is also there. Capital adequacy, Basel norms. Again, see, this is a repetition of the chapter. Basel norms was there in module B also. Here it is in module D also. So all the things will be repeated over here. More theory in this, but numericals are also there. Numericals are there in all the 4 modules. Kindly note, all the 4 modules. Okay. Asset classification and provisioning norms. What are the various classification of assets? Standard, substandard, doubtful 1, doubtful 2, then SMS 0123, 012. Okay? These are all various asset classifications. Now here we have not only asset classification, we have provisioning as well as further we have weights assigned to it. See, it's not that simple. First is asset classification. Next is provisioning. Provisioning means what is the provision you have to make for the gross NPAs so that the net NPAs remain as low as possible. Provisioning, second part. And third part is the risk weight attached to it. Risk weight. Risk weight is very difficult part. Okay, so asset classification and provisioning norms. Liquidity management. Again, see this. Liquidity, you had this in your module B. Okay. Again, it is repeated over here. Liquidity management. How do you manage the liquidity? Again, see here, liquidity means short term. You have to focus on short term everywhere. Interest rate fund management. Interest rate fund means interest rate management. Basically, see this. There are two risks which are always related to each other. One is interest rate risk and second is price risk. See, I'll give you a simple example. I'll ask you a simple example. Tomorrow at the repo rate, now last 2-3 weeks back, almost 1 month back, RBI has reduced the repo rate, reduced the CRR. Because of this, what has happened? The price of the bonds, of the government bonds, goes up. See, kindly note, interest rate goes down, price of the bond goes up. Simple logic. Interest rate goes down, price of the bond will go up. Okay? So, repo rate down, price of the bond up. That is interest rate risk, fund management. Interest rate down, price of the bonds up. Okay? Interest rate up, price of the bonds down. So you will face a loss over there. RAROC and profit planning. What is RAROC? Risk adjusted return on capital. Risk adjusted return on capital. What do you mean by this? What is risk adjusted? See, I'm having the example over here. You can see this. Why? I'll give you a simple example. Today the introductory session. Why will I teach today? Okay. See, simple logic I'll give you. Suppose if you are you have a bike. Many of you might be having the bike, right? Or car. So if you have this, why do you buy the insurance for this car and bike? Not because police catches you. That is one reason. Police will catch you. That is one reason. For that you buy the insurance. But another reason is also there. Suppose if you face an accident, then who will pay for it? Insurance. What is that? RAROC. Risk adjusted. RAROC means risk adjusted return on capital. Risk adjustment means buying something to cover that risk. Okay, so there for that you'll have to pay the premium. Okay, for that you'll have to pay the premium. Got it? So that is RAROC and profit planning. This is there is one numerical over here, which is having only one formula, but that is asked in every exam. Okay. So this is about module D. Okay, module D. Tomorrow we'll be starting with module C. Okay, C and D first. Now let's look at some examples. Means many of you might have got bored by now. That's what is this portion? I can study this. I can read this in the book also. Let's do some numericals for some examples. Means what is the level of exams? A bank holds stocks for a company A, and wants to protect the downside risk on it. So it may do what? So bank is holding the stock. I've purchased a share of Reliance. Okay, I've purchased a share of Reliance. Why have I purchased? Expecting that the share will go up and then I'll sell. So this position is called as long position. Long means what? Whenever I buy something, expecting that it will go up and then I sell when it goes up. That is simple long. This is simple, we understand it, isn't it? So whenever you are long on any stock or any commodity, always buy the put option. Because I have purchased this Reliance share expecting that it will go up. But tomorrow if it goes down, then who will pay for it? I'm in the loss. Right? So I'm in the loss in that case. So that's why always remember when you are long on any commodity, always buy the put option. So the answer will be buy put option. Okay? This was just one example. One more. The main purpose of capital adequacy norms.
Your next class starts in 14 minutes.
The main purpose of capital adequacy norms is to ensure that the bank has sufficient stable resources, isn't it? Means why should we have this capital adequacy? Capital adequacy means CRAR. Why do we have that? So that you have stable funding, isn't it? Stable resources to absorb any losses means tier 1 and tier 2 capital. One more, and then we'll stop. A bank borrows USD for 3 months at 2.5% and swaps the same in INR for 3 months for deployment in CPs, commercial papers, at 5.5%. The 3-month premium on the US dollar is 0.75%. The margin generated by the bank in the transaction is. The question seems to be difficult. Many of us feel it is difficult. It's not difficult at all. What is the case? Bank has purchased some money from outside in dollars, okay, at 2.5%. And that money it is investing over here in our country at 5.5%. So it is getting money at 2.5 and investing at 5.5. Simple. Okay. But this 2.5 purchasing, it is having a premium for 3 months because it's a forward transaction. So it is having a premium of 3 months. Premium of what? 0.75. So premium means what? Premium means you'll have to pay extra. How much extra? So I was buying at earlier 2.5%. Say this, I've solved this. See, I was buying earlier at 2.5%, but I'm paying the premium now. Premium means 0.75. So I'll be paying how much? 3.25. 2.5 plus 0.75. This much I'll be paying to that person. So 3.25 I'll be paying. And what is it I'll be getting? I'll be getting 5.5. So what is the margin? 5.5 minus 3.25. So you'll be having 2.25%. So bank will be generating a margin of 2.25. Simple transaction, isn't it? Only the point is, we feel it is difficult looking at all these words. Swap, what is this? It's mentioned somewhere, swap. Students get afraid. Oh, swap, what is swap? Nothing. Swap is just an exchange. Okay? So, kindly note, those who have just now, those who are watching on YouTube, okay, kindly join the paid classes ASAP. Tomorrow I'll be starting the main class. Don't miss the main class. It's module C. Equally difficult module. All the 4 modules are difficult. Okay. So tomorrow I'll be starting with module C. Chalo. Bye everyone.